morning.
Check, 1, 2. All right, can you all take your seats? We are about to commence. Chairman, shareholders, directors, members of the media, ladies and gentlemen, good morning. It is my distinct pleasure to welcome you all to the third annual general meeting of SYGNUS Real Estate Finance, or SRF in short. As we gather here today to reflect on another successful year, we are filled with immense gratitude as we look back on the accomplishments of your company over the past year. Your trust and unwavering support have been instrumental in our success, and we extend our heartfelt thanks to each one of you. The strength of this company lies in the relationships we've built and your commitment to our vision. These are amongst the key enablers of our success. None of this would have been possible without the hard work, dedication, and vision of all of you, our committed stakeholders. We have much to acknowledge and celebrate. From consistently strong performance to expanding our portfolio and innovating our strategies, our company remains at the forefront of the real estate investment industry. So, without further ado, let's dive into today's agenda. We have an exciting meeting ahead with updates on our performance, plans, and our strategic initiatives. We also look forward to your questions and our discussions today, and to the bright future we will continue to build together. We are optimistic about the future of SRF and the real estate industry as a whole. Challenges there are, but so are the opportunities. With your continued support and collaboration, we are confident that we will achieve even greater heights in the coming year. Thank you, and I hope you find today's meeting both informative and inspiring.
Let me add a few words of welcome, following up on David's comments. Ladies and gentlemen, esteemed shareholders, members of the board, valued partners, good morning and welcome to our third annual general meeting. This annual general meeting of SYGNUS Real Estate Finance is being conducted in accordance with the agenda that you would have received in our notice posted previously. My name is Horace Masado, and I am the chairman of the board. It is both an honor and a privilege to address you today as we reflect on our journey over the past year and we envision the path forward. I will preside over the majority of the meeting. However, as capably demonstrated just now, we will ask Member David Cummins, our Director Cummings, to preside over item 3 of the agenda, which is the re-election of directors. During today's annual general meeting, per the company's articles, all retiring directors are eligible for re-election. We have expressed an interest in being re-elected to the board and look forward to the opportunity to continue to serve as directors. I'm advised by the company secretary that in accordance with the company's articles of association, a quorum is present by proxy and in person. The meeting is therefore properly constituted, and I now declare the annual general meeting open. At this point, I will ask Director Cummings to assume the podium once again as he will take us through item 3 of the agenda. Thank you.
Thank you, Horace. So good morning again, ladies and gentlemen. I am David Cummings, Director of the Board of SYGNUS Real Estate Finance. And I wish once again to welcome you all to our third annual general meeting. I have been asked to conduct a particular item on the agenda, resolution number 3, the election of directors. Here are the instructions. Voting. Before we move to adopt the resolution, I will take some time to give a brief overview of the voting process. Casting a vote for those attending in person. Shareholders in physical attendance will vote by a show of hands once we get to the business section of the meeting and the voting on the resolutions. I will read each resolution and thereafter table for adoption. Shareholders will be asked to vote for the resolution via a show of hands. Shareholders who are for the resolution will raise their hands, followed by shareholders who are against the resolution. The scrutineer, who is Andrew Foreman, present, will take a count of the number of hands raised for and against the resolution, and this total will be added to the shareholders who voted virtually and via proxy. If a voter abstains, their vote will not be included in the count. Each shareholder or proxy present would have received either a red or yellow wristband. When raising your hand to signify your vote, please ensure that you show the wristband to ensure that your vote is properly counted. Casting a vote for those in virtual attendance. Shareholders attending virtually will vote using the e-platform. During each resolution, you should wait for your options to appear on screen or click Vote Now on your screen. Once the resolution is on screen, select the For or against option. Then select Submit Vote at the bottom of the screen. You will be asked to confirm your vote. Select Yes to confirm your vote, or select No if you want to change your vote. Casting a vote for the proxies. The company secretary has advised that a number of valid proxies have been received in relation to these resolutions. In relation to the proxies where the chairman has been appointed to vote, he will vote all proxies in accordance with the directions provided. Where undirected proxies have been given, he will vote the undirected proxies in favor of the resolutions, in favor of all resolutions. For the remaining proxies, the proxy holder must attend the meeting in person or virtually to represent the member. Those proxies will be deemed valid once the registrar has confirmed the attendance of the appointed proxy holder. Proxy holders are also permitted to cast their vote online in cases where the shareholder has not indicated their vote on the proxy form. Upon confirmation of the proxy holder's identity by the registrar, they will be granted permission to participate online. Mr. Andrew Foreman, as I indicated earlier, will act as scrutineer and will confirm the vote by the show of hands as well as total votes for each resolution hereafter. Voting will close and I will announce the results. We will announce the overall results at the end of the resolutions. Articles 149 and 150 of the company's amended and restated Articles of Association provides that 1/3 of the board, other than the managing director, if one is appointed, and directors appointed by the holder of the special share, or if the number of members of the board is not 3 or a multiple of 3, then the nearest number to 1/3 shall retire from office at each annual general meeting. The directors retiring under these articles are Mr. Horace Misado and Mr. Linwell Freeman, who, being eligible, offer themselves for re-election. The proposed resolutions are as follows. Resolution 3.1. That Mr. Horace Misado, who retires by rotation in accordance with Articles 149 and 150 of the company's amended and restated Articles of Association, and who, being eligible, offers himself for re-election as a director of the company, be re-elected a director of the company. Three, two, that Mr. Linwell Freeman, who retires by rotation in accordance with Articles 149 and 150 of the company's amended and restated Articles of Association, and who, being eligible, offers himself for re-election as a director of the company, be re-elected a director of the company. For the shareholders attending physically, you will vote by a show of hands. Mr. Andrew Foreman will oversee this segment. At the end of the voting, all the votes will be tallied to determine the results. For the shareholders attending virtually, you will vote via the e-platform. Voting is now open. You will vote on each resolution separately. You have 1 minute to vote on each resolution on the e-platform.
We will now take the vote on Resolution 3.1 first, that Mr. Horace Masado, being eligible for, having retired and being eligible for re-election, is elected to the Board of Directors. By show of hands, all those in favor? Thank you. And those against? Thank you. We'll now take the votes online. And now we'll take Resolution 3.2, that Mr. Linval Freeman, having retired by rotation and being eligible for re-election, be elected to the Board of Directors. All those in favor, by show of hands? And those against? Thank you. We'll now take the votes online. On Resolution 3.1, that Mr. Horace Masado, having retired by rotation, being eligible for re-election, be elected to the Board of Directors. 38 votes have been cast, 37 in favor, and 1 against. On Resolution 3.2, that Mr. Linval Freeman, having retired by rotation and being eligible for re-election, be elected to the board. We have 40 votes cast, 39 in favor, and 1 against.
Thank you, Andrew. Following tallying of the votes relating to resolution number 3, shareholders have voted in favor of the resolutions. I therefore declare the resolution carried. I will now hand over the meeting to our duly elected chair, Mr. Horace Masado.
So I want to thank you all, shareholders, for the confidence that is expressed in your vote. For us, both myself and Linval are grateful for your show of support. Thank you very much. Okay, so we will carry on. Yeah. I'd make a comment in relation to the directors. You know, as directors, we do remain very steadfast in our commitment to serving you, our primary stakeholders, the shareholders of this company. And we are very interested in advancing the business of the firm, working alongside management. I'd like to also take this opportunity to acknowledge and thank all of you for attending today's meeting. And for those persons who have joined since the meeting was open, I welcome you warmly once again. Your presence, whether in person or online, reflects your dedication to our company, and we truly appreciate your engagement and support. This annual general meeting is being held in a hybrid format, allowing shareholders the flexibility of participating in person or online. It serves as a valuable forum for shareholders to receive updates from the board, the investment manager, and our external auditors, as well as to ask questions and to engage in meaningful discussions with the company. This meeting is convened in St. Lucia, and we have a satellite location here in Kingston, Jamaica, from which the proceedings of the AGM are being carried to you live. Shareholders will be able to view the proceedings of the AGM, vote on resolutions, and submit their comments and questions in person or by logging on to the e-platform. The instructions to access the e-platform were provided in the shareholders advisory released on the Jamaica Stock Exchange's website and on various social media platforms. Registration for access to the AGM was also circulated to all shareholders. It remains open, so if someone has not yet registered, you know of someone, give them a call. They can still register and access the meeting for the duration of it. The notice of the meeting and the form of proxy were dispatched to all shareholders on record in accordance with the company's Articles of Association. If there is no objection, I will propose that the notice of meeting be taken as read. I'll do a little bit of a reflection on our journey to our last year end. In August 2019, SRF has been steadfast in its mission to unlock value in real estate assets across the Caribbean through innovative and flexible financing solutions. Our commitment to this mission has positioned us as a leading alternative investment firm in the region, dedicated to accelerating economic growth and delivering attractive risk-adjusted returns for all investors and shareholders. The fiscal year ending August 31, 2024 was marked by several significant accomplishments. Our net profits grew to $315 million, a substantial 49% increase compared to the previous year. The book value of our shares also grew from 23.89 in August 2023 to 24.85 at the end of August 2024. We also had significant successes in raising capital, securing the equivalent of $4.11 billion through a private placement, of which $3.4 billion was raised during the fiscal year. Our strategic initiatives have been pivotal in driving growth and value. Our One Belmont development, the construction of our flagship 9-story commercial tower, One Belmont, reached 100% completion. We have executed long-term lease agreements and advanced interior build-out for several tenants, positioning One Belmont as a premier commercial space in the region. As at the date of this meeting, the building is fully rented and is now occupied by one tenant. It is anticipated that the building will be fully occupied within the next 6 to 12 months. During the year, we strategically exited investments in properties at 56 and 58 Lady Musgrave Road through third-party sales, optimizing the returns on those investments. Additionally, we completed the investment exit for the Spanish Town Road industrial facility, retaining one-third share to create a new income-generating asset in the class for the company. I'll now introduce to you our directors. In addition to myself, there are 5 other directors of the board. To my immediate left, there is Mr. David Cummings, and he has been assisting with the meeting this morning. David is also the Senior Vice President and Head of Real Estate and Project Finance for SYGNUS Capital Limited, our investment manager. And to his left, there is Ms. Elizabeth Stair. Ms. Elizabeth, she is, of course, present here in Jamaica. And then we have beside her, to her left, Mr. Linval Freeman. Linval is also the chairman of the Audit and Governance Committee. To his left, we have Mr. Pierre Williams. And online, we have Dr. Ike Johnson, who is a Senior Vice President and Chief Operating Officer for SYGNUS Capital Limited, the investment manager of the company. We also have with us this morning virtually Mr. Rory McNamara and Ms. Valerie Rapier, who are both representatives of our company secretary sitting in the St. Lucia office. The directors who are joining us virtually are able to participate in the meeting and answer questions that may be posed by this meeting or in this meeting. Also in attendance, we have members of the Investment Managers Executive Team here today. To my extreme left, there's Mr. Beresford Gray. And then we also have in the audience Mr. Jason Morris, Chief Investment Officer. We have in the audience also Ms. Cerilyn Hudson, Chief Legal and Compliance Officer. We have Mr. Gregory Samuels, Senior VP and Head of Investment Banking. We have Ms. Elizabeth James, VP and Head of Wealth. We have Mrs. Monique Anthony, VP and Chief Financial Officer. I haven't seen her, but I'm going to mention it. Is Ms. Yashi Hall here? Okay, not quite just yet, but she may be here sooner or later. And we have Mr. Andrew Foreman in the back, who is helping by performing the task of being a scrutineer this morning. Several other team members are here in the audience, and we say welcome to you all. I'd like to acknowledge the presence of KPMG here this morning also, and they're represented by Mr. Damian Reed, partner, and Mrs. Zafian Edwards-Newman, director at KPMG, and they will be participating in the meeting in a little while. Representatives from our registrar and transfer agent, the Jamaica Central Securities Depository, are present with us today. And I understand that we have 2 persons representing the JCSD, Dr. Rennie Brown and Ms. Adika Green. Several members of the press and non-shareholders are also present with us today. During the AGM, I'll refer to SYGNUS Real Estate Finance Limited as SRF, or the company, all refer to our beloved company. You have been provided with a copy of the agenda, and for the remainder of the meeting, we will follow the outline of the agenda. In respect of apologies, I have been advised by the company secretary that there are no apologies for absence. And in respect of the minutes of the meeting, the directors have confirmed, and the minutes of the meeting of the last AGM, which was held on March 21st, 2024, the directors have confirmed that the minutes of the AGM are a true and correct record of the meeting, and copies of those minutes are available for viewing on the company's website. Okay, let's talk a little bit about the purpose of the meeting, and we'll get to the formal aspects of the agenda. The purpose of this annual general meeting is to seek the approval of shareholders of the company for the respective resolutions outlined in the notice. The first item of ordinary business is the adoption of the audited financial statements for the year ended August 31, 2024. The second item of ordinary business is to ratify the interim dividends and declare them as final. The third item, the election of directors, was already dispensed, and so we will skip that one when we get there. Item 4 relates to the director's remuneration, and the fifth item is the appointment of the auditors, KPMG, who have indicated their availability to continue to act in that capacity and to permit the company to set their remuneration going forward. The resolutions are duly set out in the notice of annual general meeting dated 23rd of December 2024 and duly signed by the company secretary. Now, I want to go through a few meeting procedures, and I apologize for how long this is, but we're going to get to the business of the day very shortly. Director Cummings described the voting process earlier. We will continue to use that process throughout the remainder of the meeting. Okay? In respect of questions and answers, we will have two sessions or two segments in which members attending the meeting, whether virtually or in person, would be able to pose questions. The first segment will be prior to the adoption of resolution number 1, the adoption of the audited financial statements. The investment manager will make a presentation on the company's historical performance and the outlook based on current projections. At the end of the presentation, we will have the first question and answer segment where stakeholders or shareholders will be allowed to pose questions. We will allocate 15 minutes to the first segment for questions and answers. Following the votes on the remaining resolutions, there will be a second question and answer section where shareholders will be allowed to ask questions relating to the company's business once again, and we'll allocate a further 15 minutes for that segment. Each question and answer segment will be moderated by Mr. David Cummings, our director, right here. For the shareholders attending in person, if you wish to raise a question, please raise your hand. You'll be acknowledged, you'll be presented with a microphone, and you'll be able to pose your question. For those attending virtually, if you wish to ask a question, select the Q&A option that's located on your screen, enter your question into the text box provided, and select send. The question will be read aloud by one of the hosts here in this meeting, and we will provide you with a response. Okay. With that background, we will now move to the formal business of the AGM as set forth in the notice of the meeting and the agenda. Okay, so let's move to resolution number 1. In accordance with Article 195 of the company's amended and restated Articles of Association, the company is obliged to lay before this meeting the audited financial statements together with the reports of the directors and auditors, which are contained in the company's annual report for the year ended August 31, 2024. The audited accounts were circulated and are before this meeting for discussion. Before inviting discussion on the reports, I will invite our external auditors, KPMG, and the Chief Investment Officer of SYGNUS Capital Limited, Mr. Jason Morris, to make presentations on the auditor's report and the company's performance and outlook, respectively. Our auditors, KPMG, have given their opinion that the audited financial statements present a true and fair view of the financial position of the company as at August 31st, 2024. I'll now ask Ms. Zafian Mrs. Newman, to join us at the podium and read for us the auditor's report.
Hi, all. Thanks, Chair. You hearing me properly? Yeah, all right, thank you. So, as Harry said, I'll be reading the independent auditor's report for you today. However, okay, thanks. However, because this is a St. Lucian entity, we are not required to read the auditor's report. However, for the shareholders, we'll take you through the key areas of the audit report. Beginning on page 39, Independent Auditor's Report. To the members of SYGNUS Real Estate Finance Limited. Opinion. We have audited the financial statements of SYGNUS Real Estate Finance Limited, the company, comprising the separate financial statements of the company and the consolidated financial statements of the company and its subsidiaries, the group, set out on pages 46 to 110, which comprise the group's and company's statement of financial position as at August 31, 2024, the group's and company's statement of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising material accounting policies and other explanatory information. In our opinion, the accompanying consolidated and separate financial statements present fairly, in all material respects, the financial position of the group and company as at August 31, 2024, and the group's and company's financial performance and the group's and company's cash flows for the year then ended in accordance with IFRS accounting standards as issued by the International Accounting Standards Board, IFRS accounting standards. Basis for our opinion. We conducted our audit in accordance with the International Standards on Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statements section of our report. We are independent of the company in accordance with International Ethics Standards Board for Accountants, International Codes of Ethics for Professional Accountants, including International Independent Standards, IESBA Code, together with the ethical requirements that are relevant to our audit of the financial statements in St. Lucia, and we have fulfilled our other ethical responsibilities in accordance with these requirements and the ISBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the financial statements of the current period. These matters were addressed in the context of our audit of the financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. Page 40. Continuing report on the audit of the financial statements, continuing key audit matters. Our first key audit matter, valuation of level 3 investments. Continuing in the table to the left, key audit matter. The group and the company holds significant investments of $1,574,579,000. 2023, $1,568,613,000 that are classified as level 3 measurements. These investment securities, measured at fair value, are instruments for which there is no active market available. Therefore, the valuation of these investments uses unobservable inputs, which involves significant estimation uncertainties. See notes 2D, 6, and 24 of the financial statements. Over to the right, how the matter was addressed in our audit. Our procedures in this area included, among others, assessing the group's and the company's investment model and obtained contracts and term sheets to understand the terms of the investments, involving our own valuation specialist to assist us in assessing the reasonableness and suitability of the valuation model employed and the fair value conclusions. We considered the requirements of the financial reporting framework and tested the sources of data and underlying assumptions utilized to value the investments and evaluated the impact of any variations. Assessing the adequacy of the disclosures, including the degree of estimation uncertainty involved in determining fair values by reference to the requirements of the financial reporting framework to evaluate the clarity of those disclosures in communicating key judgments and estimation uncertainties. Over to page 41. Our second key audit matter, evaluation of investment properties. And the key audit matter reads to the left. The group has significant interest in investment properties which are measured at fair value amounting to $9,257,435,000. 2023, $10,443,270,000. The fair values of these properties are appraised by a qualified independent property valuator hired by the group using market comparable approach or the income approach. The valuation of the group's investment properties requires significant estimation uncertainty given the infrequency of trades in comparable properties in some cases and the absence of a number of observable recent market prices, which is impacted by uncertainty of market factors, pricing assumptions, and general business and economic conditions used in valuing these properties. These judgments and assumptions could result in estimated fair values that are materially different from the actual transaction values. See notes 2D, 3G, and 12 of the financial statements. How the matter was addressed in our audit. Our procedures in this area included, among others, involving our valuation specialist, we assessed the methodologies and assumptions applied in determining the fair value of investment properties. For each property, we determined a range of prices and compared these to the values determined by the group's independent property valuator. In order to derive our range, 1, for fair values determining using the income approach, we assessed the appropriateness of the valuation model using our experience with properties of these types, making our own assessment of a range of discount rates and capitalization rates by reference to external sources to the extent available and performed our fair value calculation to obtain the range. 2, for fair values determined using the market comparable approach, we determined a number of comparable properties by reference to factors including zoning, physical characteristics, and environmental factors to derive our range. Continuing on page 42, evaluated the competence, independence, and experience of the group's independent property evaluator with reference to their qualification and industry experience. Assessed the fair value disclosures relating to investment properties by reference to the requirements of the financial reporting framework to evaluate the clarity of those disclosures in communicating key judgments and estimation uncertainties. And I will pause there for the report, and we will move to page 45, where I will read the final paragraph. The engagement partner on the audit resulting in this independent auditor's report is Damian D. Reed, KPMG, Chartered Accountants, Gros Hillet, St. Lucia, October 28, 2024. Thank you.
Thank you, Mrs. Newman. I'll now invite the Chief Investment Officer of SYGNUS Capital Limited, the Investment Manager of SRF, Mr. Jason Morris, to make a presentation on the company's performance and on the outlook of the company.
Good morning, everyone. All protocols observed. Okay, I'm going to spend a few moments just reviewing the backdrop to SRF's financial results and also trying to demystify how SRF has been creating value and will continue to create value for shareholders. Are you... Okay, that doesn't look too clean. Okay, so this first slide is showing you SRF's net profits over the first 5 years. And the first 5 years, SRF started pretty much in 2019, just before COVID. So you see that SRF would have made a positive net profit every single year since the company was formed. And last year, the company made $315.08 million. Now, all of these, the 5 years of positive net profit, what it really means for shareholders, or the number you really need to identify, is shareholders gave SYGNUS Real Estate Finance about 4.7 billion Jamaican dollars in equity, in investments, right? And the question for shareholders is, well, what has been the return that we have generated on those monies that you have given to the firm in terms of the company's net profit? So over the first 5 years of SRF's existence, the return on average equity, which is one metric that you use to measure performance of capital that has been invested, was 19.15%. In other words, SRF generated an average return on shareholders' equity of 19.15% over the first investment life cycle. You need to clap for that thing. Don't let me be the cheerleader for everything. So the question then is, well, 19.15%, what did we promise to shareholders? We told shareholders when the company was formed in private placement that we were targeting a 12% in US dollar terms return on average equity. That is what we use to raise the first dollar of capital from pension funds and investors in a private placement. So if you adjust that 12% to convert it to Jamaican dollars, I think we are there or thereabouts, or just a little bit ahead in terms of generating 19.15% as an average annual return and the capital that we have received from shareholders. So, this next slide is just highlighting a couple of achievements over the first investment life cycle. Again, the objective is for us to demonstrate and continue to demonstrate creating value with the capital that we have. So the first item on the board is a reflection of the first slide. What is the average return over the first investment life cycle? 19.15%. Tick. The second item on this screen is showing you 1.72 times. And this 1.72 times is reflective of a new term that I'm going to introduce, which I want investors who are investing in non-traditional assets to understand how you measure the performance of the capital that you have given to your company. So effectively, I'm going to call this residual value to paid-in capital, the net residual value to paid-in capital, which in simple terms just mean, since you are equity investors in a company, if you were to dismantle the company, pay off all its debt, sell off all the assets, what's the residual value that would remain? What would shareholders get in their hand, right? And that is what you refer to in the balance sheet as your shareholders' equity. So the 4.7 billion that shareholders invested in SRF, we have increased that by 1.72 times to the end of the financial year, August 2024. In other words, we have increased the $4.72 billion to 8.11 billion, which is how you get the multiple of 1.72 times. So, in very simple terms, over a 5-year period, you could say we have almost 2 times or 2x the investment capital that investors have given us. Third thing is, well, based on the audited financial statements, what is the total value of the company divided by the total number of shares that you have? So what is the book value per share? And that was a record $24.85. And when the company started, I think book value was $13.45. And after the company closed the initial public offering, the book value was $20, I think 53 cents there or thereabouts. So consistent with each year of positive annual profits and the 19.15% return on equity and the 1.72 times increase in the residual value that is due to shareholders if the company were to be disbanded and sell off all the assets and then pay out everybody their cash, that $24.85 continues to increase, which is a positive thing. Fourth thing is the next 2 items are just metrics that you always want to look at. The fourth one is, well, given that we have taken so much of investors' money, how much capital have we actually deployed? What have we been doing with the money? So we have deployed 15.49 billion Jamaican dollars into real estate assets, into the hard economy, into the real economy, into creating jobs, into putting up structures on the horizon that you can go and feel, touch, taste if you so desire, etc. It's real, right? It can't disappear. You can go and touch it and see it and feel it. And thus far, over the first investment life cycle, we have actually gotten back $6.47 billion. In other words, this is not a figment of our imagination. We are not deploying capital and can't get back the money, right? But remember that this is real estate. It's an illiquid asset class. So you invest your money day one. It takes quite a while for the value to be unlocked, and then you collect the money at the back end. We are not selling widgets or selling teacups, which you get the cash flow every day. These are illiquid assets, and it takes time to unlock the value. So I just want people to get the appreciation of the capital that we have deployed and the capital that we have received back from our investments thus far. And finally, and perhaps one could say most importantly, SRF made its very first dividend payment in December 2024, which has long been promised, and that dividend amounted to a yield of about 2.1% or so, small, but it's the first step in a very long process as we head into the second investment life cycle. So that's the background. As proof of our evidence of the fact that we are putting your money to good use, this is Spanish Penwood, our so-called Spanish Penwood, which is IMCA's head office, built to suit, around 33,000 square feet, built, completed, leased it out, then structured a beautiful investment for our pension funds who now are majority owners of that asset. And SRF, of course, has a small stake in it, right? We also own a piece of this asset and continue to generate lease income on this, and we will continue to do so for maybe 10, 20 years in US dollar hard income. So that's first evidence of the great work that David and the real estate team have done in terms of from concept, right, all the way to crystallizing into money. And second, but by no means least, this is the star boy of the show, so to speak, which is One Belmont, 9 stories, 78,790 square feet. It's completed. There are people who are inside the building. There are people who are constructing their interior build out and will join the one party who's already in the building. And as we go through time, you will see all the tenants take up their space and occupy the building, which means lease income. And all I can say is that as you are shareholders, we are in the process of structuring a way for you to actually physically own a part of this building, right? So you can look out for that over the short to medium term, or over the medium term. But this is real, right? This is what your money has been spent on, and it's from just 2 pieces of land to create that structure. So give yourself a round of applause for how your money has been used. Now, I will jump to why we're actually here, which is the financial performance, very quickly. So for the financial year, SRF would have generated an increase in net profit of 49% to 315.08 million. Total investment income would have increased by 9.6% to 839.24 million. Net investment income up 62.7% to 508.5 million. Now, the main drivers of this really has to do with the hard assets that's on SRF's balance sheet, right? Which is joint venture, primarily represented by One Belmont. The further we go in time, the more the value of the asset will be, because we have lease contracts, and as you know, real estate is an asset where the value inches up over time, and the lease contracts also inch up over time in terms of the revenue that you get from them. We also had gain on investment property, which was up 21.6% to 524.13 million. And an important item to highlight here is that about 79% of SRF's real estate investment properties are actually in US dollars, right? However, due to financial accounting standards, those investments are only valued, we only value them once per year, which is at the end of the financial year. And in that context, the US dollar fluctuation in the price, which has to get translated to Jamaican dollars for purposes of financial statement, only gets recognized at the financial year end, which means that any quarter you're looking at SRF's financial statements, you're likely to see FX movements, which in many instances will be negative if the exchange rate is moving against us, right? But you have to bear in mind that the vast majority of the $15 billion that's on the balance sheet are actually US dollar denominated assets. And you won't get that broken out on a quarterly basis. So that's rolled up in the revaluation of the asset at the end of the financial year. So I just want you to bear that in mind in terms of context, and always keep that return on equity and residual value in mind whenever you're looking at SRF's financial statements. So this is the financial statements, summarized version. I'm not going to go through it. I just want to highlight about 2 or 3 things. The first thing is net interest income, which you can see was a negative 202.776 million. It's a big jump from the previous financial year. Why did that happen? Very simply, SRF would have raised new capital to pursue its second investment life cycle phase, and the use of more debt financing have a timing difference. We raise the capital today, we have to deploy that capital over time, right, and unlock value into assets. And so as we move from one financial year to the next, we would have seen an increase in net interest income. However, part of that capital that we have raised is to utilize to invest in what we are calling third-party real estate investment notes, which will generate a rate of return higher than the cost of the capital that we raised. However, I raised capital $100 today, and I'm paying, say, 8% for it. I'm paying 8% on the whole $100. If it takes me 6 months or 9 months to deploy that $100 million into new real estate investment notes, yielding between 12, 13, 14, 15, whatever percent, I'm not going to get the full economic benefit of that from day one. So you're going to have a difference between when I'm recognizing a lot of interest expense, but I don't have the interest revenue to offset it. But it's a timing issue, right? So that's one I want to highlight. Second thing is, you see there are 43.074 million loss on sale of real estate asset. In the actual financial statements, that's represented by about 77 plus million dollars loss on one particular exit, but you also have a gain on that exit of about 34 million. So simply put, on Spanish Penwood, we would have structured that investment very uniquely, where we would have received half of the proceeds from the sale upfront, or maybe a year and a half or so ago, and the remaining half would have been exited during the course of the financial year, right? So we had an agreed set price. So let's say this agreed price was $10, but the market value of the asset had increased to $13, right? So we are carrying it on our financial statement at $13, but the agreed sale price from long ago was for $10. So on the piece that SRF would have purchased, we would have recognized in the financial statement the difference between the market value of $13 and $10, so we booked that as a loss. But we then bought that asset ourselves, which means that because we bought it at $10 and it's valued at $13, we then had a gain on the other side, right? So if you're looking in the notes of the financial statements, just to demystify, that's one portion of why we have this $43 million loss, right? That being said, we have already made up all of this $43 million in losses already, because that asset that we bought back, the lease income on it since that time has exceeded the loss that we would have booked. So I just want to demystify in case you think that we are throwing away shareholders' money. Next thing is total operating expenses was reduced to $330.7 million, and that's primarily because of what we would have announced last year, which is the investment manager, because we are going through a period of exiting the first investment life cycle at the end of 5 years and entering a new investment life cycle. We would have decided to reduce the management fees over 2 years. Management fee reduced from 2% to 1% in the first instance, which was last financial year, or this financial year, August 2024, and then it would have been reduced from 2% to 1.25% in the current financial year, which is the 2025 financial year. And then in 2026 financial year, it will resume at 2%. So that was the primary driver for the reduction in total operating expenses, and the rationale for that was, as we get to the first investment life cycle, we have a lot of transactions that we're going to exit, which means investment activity would have slowed down. So the investment manager is putting his money where his mouth is by saying we are very confident in what we are doing, where we will take a reduced management fee, and then when we get to the stage where in the second investment life cycle where we have ramped up investment and ramp up performance of the company, we return to our normal management fee. And this is not unusual, this is what happens all over the world. This is the global standard of ensuring that you are actually executing and we are aligned with the shareholders of the company. FX, I explained the FX already, so I won't explain it again. Very quickly on this slide, these two slides are just showing you that for every dollar of assets that we have on the balance sheet, how much of that is going out in operating expenses. And the threshold was to ensure that we do not exceed 3.5%. And as you can see, we were at a very low 2.1%. So we are not wasting shareholders' money on expenses. The second one is simply looking at the same metric in a different manner. For every dollar of revenue, how much of that really is expenses, and that was 39.4%, which is in line with the 45% threshold that we have set. So in other words, we are being good stewards of shareholders' capital. This slide, very simply, shareholders' equity, 8.12 billion, which is a new record, and total assets on the balance sheet, 15.85 billion. And just to reinforce the point, in case, since it was introduced as a new term, the shareholders paid in capital, 4.72 billion, that's the money that you shareholders invested in SRF. The 8.12 billion, that's the money after you take out all expenses, all the debt that the company borrow if you were to pay that back, etc., and the value of the assets, that's what the value of your paid in capital is. So we have increased it by 1.72 times, and that is one metric that you need to watch in terms of, are we creating value with your money that you entrusted to us? Very quickly, on the investment activity during the year, real estate investment assets was up to, well, it was down to 14.7 billion, primarily from 14.92 billion in previous year, primarily because we would have sold or exited some investment assets that we had on the balance sheet. One of the things that we said last year was that we wanted to optimize the balance sheet of SRF. We had quite a number of investment properties on the balance sheet, and we recognized fully that in some instances, if we were getting a value for our property that we had intentions of developing or putting a structure on, and somebody came to us and offered us cash, right, for that property, and when we evaluate it, we feel that the better trade is to take that cash and redeploy it into other investments, then we do that, right? So remember that what we are doing is unlocking value, and that unlocking of value can take a myriad of channels, and we exercised that channel a lot last year by exiting certain properties where we were proposed some offers that we couldn't refuse. So total investment property, 9.26 billion, down from 10.44, again down because we sold some properties. Real estate investment notes and income generating assets was up 2.29 billion versus 1.83 billion, again consistent with us trying to generate more interest income to cover that interest expense that you saw. Joint ventures, the value of that 2.03 billion, up from 1.54 billion, again because the value of the Starboy in the portfolio is going up. And deployment, so while we are getting back money, we are investing money at the same time. We would have deployed 1.09 billion. So I'm going to really rush through. Okay, so just some highlights on the first quarter financial results. We continued the progress on our 55 acres Lakespen Industrial asset. One Belmont would have had its first occupancy. I guess it's subsequent to the end of the quarter. But the process really started in the last few days of November. Would have had an additional exit during the quarter, 1.65 billion of an asset that we were made an offer on. And book value per share had increased versus the similar quarter in the previous year. And this is the financial results highlights of the quarter. Total investment income, negative 125.65 million versus negative 30.96 million last year. And net investment income, negative 226.96 million versus negative 114.89 million. Again, I want to highlight the fact that the quarterly results, as they have been since SRF inception, is very lumpy because this just reflects the operating activities that the firm does from quarter to quarter, and we only reflect the full value of what we are doing at the end of the financial year. I'm not going to really go through investment activity too much. Pretty similar to what we would have had at the end of the financial year, because I want to spend the last few minutes going through the next 3 slides. This slide is just giving an update on the assets that SRF still has on its balance sheet. The one in green is a new asset that would have been added. The name 5658 LMR, yes, we would have sold 56 Lady Musgrave Road and 58 Lady Musgrave Road, so we simply repurposed the company, right? Instead of setting up a new company and paying all of those costs to set up a new company, we sold the asset that the company held and just repurposed the company to hold a different asset. So you can see that we would have exited a number of transactions. 123 Hillcrest Avenue would have been exited, 56 and 58 Lady Musgrave Road, and then the Spanish Pen would remain in portion that would have exited. This is another shot of the Starboy in the portfolio. So, my last few slides, if I may be permitted. Okay. I spoke about this already, so I won't go through this. This just reflects the change in the fees that I was talking about in terms of management, basically putting its money where its mouth is, so to speak, literally and figuratively. So these next 3 slides are what I want to spend about the remaining time on. So this is setting the path for the next investment horizon, which we are already in, the second investment horizon, right? Very simple, not complicated. We are doing a lot of things, but if you want to simplify it, it's 3 things that we're doing. 1, we're executing on Lake Spen, which is 55 acres. It's an industrial property, it's huge, it's massive, massive opportunity. I don't need to say any more than that. When we have additional information, we'll share it. That's 1. 2, Mammy Bay, 14 acres, beachfront. We continue to execute on that. And 3rd, we have a series of third-party real estate investment notes and third-party real estate projects that we are executing and are at various stages of execution. We have already committed 2.5 billion specifically to real estate investment notes to get that income that we were talking about from the capital that we had raised and that the chairman spoke about earlier in his remarks, as well as we have 3 billion of transactions that are at various stages of evaluation. And that is just showing you the 2 new star boys in the portfolio, which is Indus 55-acre industrial property, 14-acre beachfront. They are real, you can go and look on them and touch them, right? Second to last slide, update on strategic initiatives. So the first thing is, we have a very simple business model. We just, 1, executing our key strategic initiatives. What are those? Well, 1 Belmont, now that the building has been built, and we have tenants in it, and generating lease income, so forth and so on, the next step is to structure our investment exit, right? Which I spoke about earlier in terms of ensuring that you get to participate in ownership of the physical building. Spoke about Mammy Bay and Lake Spen already. Also spoke about the REINs, which is what the deep access to flexible capital is. Portfolio realignment, I also spoke about that because that reflected us, for example, selling some of the assets that we had on the balance sheet because we got offers that we couldn't refuse. And finally, well, life cycle overlap, I also went through that. And finally, in the execution of strategic initiatives, we do have assets that are third-party REINs that we are doing workouts, asset workouts on. I mean, the asset is our collateral, and we are working through the process with those developers to claim on that collateral and get paid out, right? That's part of investing. Everything that you do won't necessarily work out 100%. Second thing is, now that we have basically cornered the 4 corners of Jamaica, we are now seeking to expand our footprint in other Caribbean countries. It was important for us to start with Jamaica, learn Jamaica, master Jamaica. Now we are moving out to other Caribbean territories. So we are evaluating multiple opportunities across about 4 or 5 different Caribbean countries, which when we have additional information, we'll inform you on that. Dry powder, this is something that we do all the time. You invest, you get back your capital, you pay out some dividends, and then you reinvest, and that's the process that we want to go through. And if it required, you raise some new capital to continue that process ad infinitum. And finally, dividends, which I spoke about. I don't have anything else to say except we are pushing to ensure that we can make the second and third and fourth and fifth and sixth, etc. dividend payments. Now, this is the last slide. And it's perhaps the most important slide. So I've already gone through and said, how much capital did shareholders put in the company? How much capital those shareholders have in the company? 4.72 billion. What's the value, what's the residual value of that capital today? Well, it's 8.12 billion, right? Which means that we have increased it by 1.72 times. Went through that already. Well, what's the return that we have generated and that capital that you have given us? An average over the first investment lifetime is 19.15%, right? So far, so good. But if you look at the book, at the chart, the blue line is SRF's book value per share. Again, it's just another way to show you value, right? There are many ways to show you value. It's another way to show you value. The red line is the stock price. So then I'll need to do some maths, some simple maths. So if shareholder capital is 4.72 billion, that's the money that shareholders give us. We are saying the value of that 4.72 is 8.12 billion now. The market is saying, no, sir. At the financial year end, the discount to the book value was 58.8%. So if you take 58.8% and 8.12 billion, you're going to get a figure that's less than 4.7 billion. So if shareholders give you 4.7 billion, right? We have gone out and invested it. We spend money, we pay out expenses, we borrow loan, pay back loan. We said the value is 8.2 billion, but the market is saying the value of SRF right now is lower than the share capital or the capital that original investors invested in the company. So let me say it again. Investors invested 4.7 billion in equity. The market is saying, no, that value about 4.5 billion. Which means that since SRF started, it has generated no value at all on all the assets that it has on the balance sheet. And worse, if you look forward, all the assets that SRF has on its balance sheet, the 55-acre, the 14-acre beachfront, all of those, we're going to generate a negative return on them. That math just doesn't make any sense. So my adage to shareholders and investors and prospective shareholders is to give you information for you to understand how you evaluate and how you value non-traditional assets. Real estate is a non-traditional asset class, right? Normally you look at PE and so forth and so on. These are hard assets in the ground. You can't go and burn down a land like 55 acres, which is just raw land. You can't destroy it, right? You can't destroy 14-acre beachfront, etc. You could try to destroy one Belmont, but yeah. So I'm saying, right, that this chart tells you that there's market dysfunction. It doesn't make any sense whatsoever, because if people are saying that since SRF started, the capital that you put in the company as equity, that no value has been created on it at all, because that's what it's really saying. And worse, since we actually have assets that are undeveloped, that we're going to generate a negative return from today going forward into the future, you determine whether or not what action you need to take. That's the end of my presentation. Thank you.
Thank you, Jason. I hope you have your questions ready. And all the star boys and the star girls, the leading actors. So we're going to open the floor for questions for the next 15 minutes. And persons in the room, I just remind you, you can raise your hand and ask a question. For persons online, you can submit your question by selecting the appropriate box on your screen. And I'll just invite David to come to the podium and he will oversee this session. It's going to be 15 minutes long, but please submit your questions. We'd love to talk to you. Thank you.
Can we show of hands, please? Yes, sir, in the white and gray shirt. Can we ask you kindly to identify yourself before you give the question?
March. Got it? All right. So, SYGNUS Real Estate is basically just buying land and selling land, not developing, right?
Sorry, could you say it again?
SYGNUS Real Estate finances buying land and selling land, not developing. Is that correct?
No, I don't believe that's what the Chief Investment Officer said. Would you?
No, I'm asking Jason if SYGNUS Real Estate finance.
Sorry, hold on first. Sorry. From a procedural standpoint, may I just ask, as I had indicated, can you kindly identify yourself?
I did, Robert March.
Sorry,
I did.
We didn't hear it. Sorry.
Come?
My apologies. I didn't hear it. Sorry.
Okay, so what I'm asking again is SYGNUS Real Estate finance is buying and selling land, basically, not developing land.
And Jason will answer that as the Chief Investment Officer.
Absolutely not.
Not.
We're not just buying and selling land.
So what land do you, so you're developing land?
Okay, so okay, so that's actually an excellent question, right? Because I think there are maybe some people who don't understand our business model, so give me an opportunity to explain it. So what does SYGNUS Real Estate Finance does? SYGNUS Real Estate Finance invest in the real estate asset class at the value creation stage. What does this mean? Very simply. We do a number of things. One, we will buy land where we think there is value to create on that land. Just like what we did with Spanish Penwood, we bought the land for Spanish Penwood, conceptualized what needed to go there, work with IMCA, got the drawings done, did the development, went and got the lease contract executed, then went and structured for pension funds to come in and invest, and then exited the asset. So in that instance, we have bought the land and developed it. Same thing for One Belmont. Somebody had a piece of land, we bought a piece of land beside them, put the two lands together, conceptualize, develop, put together the construction and execution team, executed it, went and negotiated lease contracts with some of the biggest blue chip clients, not just in Jamaica but in the world, because there are international entities who are leasing the building, and we are in the process of executing how we exit, meaning get back our cash that we have invested. So we buy land and develop land. One. Two, sometime when you buy land, somebody can come to you and make you an offer that when you evaluate what you were going to do with the land, it makes better sense for you to sell that land and take the cash that you get from it and put into another asset that you have, which is what we have also done. So Hillcrest, we bought that land, we held it, somebody came and offered us money for it, we sold it, and we are redeploying that capital. 56 Lady Musgrave Road, we bought that land, we had an idea of what we're going to do with it, somebody came and offered to buy it from us, we sold them, take the cash, we are redeploying it. 58 Lady Musgrave Road, same thing. We have Miami Bay, which is a beachfront property, we bought that land, we sold half of it to somebody else, took that capital, reinvested in other projects, we kept the other half, and what we are doing, we are going to monetize the other half by doing something on it. The 55 acres that I spoke about, industrial asset, we bought the land, and what we are doing now, we are developing and unlocking the value to then exit it. And we have other assets that we have that when we look out through our crystal ball, if we think that it's better to take cash and put it into a development, or it's better to take an offer if somebody really wants it and they offer us a price that is above what we bought it for, then we are investors, right? We are trying to make money. So whatever the path to make money, that's what we do. We're not going to be beholden to say, okay, we bought the land to develop it, or we bought the land and we could develop it, and then because that's what we did intention, we then hold on to that idea even if we're going to make a loss if we develop. So to answer your question, we do buy land and sell land if that's what's required. We buy land and develop land if that's what's required. And we also invest in other people's land. Like you have a land, you don't have enough money to develop it. We will come, put it in a joint venture or put it in a co-development, and we work with you, and then we finance it, and then we split the profit between us. So we do, and that is just because, why are we doing that? Because we're trying to make money. So that's how we generated the 19.15% return on average equity over the first 5 years, and that's how we took 4.72 billion in shareholder capital, or paid-in capital, and converted to 8.12 billion, which is 1.72 times over 5 years.
That's basically what I said. That you buy land, you either sell it or you develop it, right? And then sell it, right? Basically, that's what I said. So currently now, what assets do you hold now? Now you have Belmont Road, because that's your office. So you have Belmont Road.
Yeah.
That's your office. What other assets? You have half of Mammy Bay. What other assets you have?
Good question. So the other assets that we have, these are the assets. So
I can't read that. You have to read it for me.
So you know about one Belmont already, which is developed. Lakes Pen, we spoke about that, 55 acres, right? 56, 58 Limited, which is in Hog Hole, St. Anne, that's 1.3 acres. Montrose Road, St. Andrew, that's 0.9 acre. Mammy Bay, spoke about that already. And 26 Seaview Avenue, Kingston 10, 0.5 acres. Those are the remaining assets that we have on our balance sheet as land.
Currently.
And there are some things that are not here because they're not finalized yet, but there are other lands that will show up on this chart, maybe the next quarter, that we are in process of acquiring. So we are constantly, depending on where the opportunities are, acquiring assets, but at the same time, we have to exit assets because that's how we get money to redeploy and make returns.
Lady Musgrave now, I see a big building that went up.
We sold it.
Huh?
We
sold
that.
Right,
yes.
right. Like, I mean, but you did the development before.
No.
We sold
the land for X dollars and sold it for a handsome premium for Y dollars.
Right.
Yes.
But you're not going to sell Belmont Road because that's your office. But you're going to sell units in Belmont Road?
We're gonna sell. Technically, yes. Yes.
Okay.
Yes,
so you won't own Belmont Road then? You're going to sell it off, each unit?
Well, we will still keep a part of it.
Yeah, for your offices.
No. So, we will keep a part of it to generate income for SRF.
Okay.
The party who owns the office is not SRF.
Right.
SRF is generating rent or lease from the entire building.
Okay.
Right?
Okay, got you.
Yes, even the portion. Even the SYGNUS office, we are paying rent for it. Yeah. But good question, because I think a lot of people probably didn't understand some of these things. So I'm happy for that you highlighted it, and I could bring some. Well, I already did that, right? Yeah. Mr. Chairman.
Wait there. Any more questions from the audience?
Yes, sir.
The gentleman in the cap, can you identify yourself first, please?
Yes, good afternoon, everyone. Bertram Ferran, shareholder.
Go ahead.
Clear? Okay. All right, so I want to thank you for the dividend that was paid out. I received it. And commendation on finishing the One Belmont property. All right, a hot topic is the Trans-Jamaican Highway. Is that, what you call it, asset class that SRF would look into in the future? Highways, that kind of thing, invested in that kind of asset?
Another excellent question, and I think the answer is that we, on your behalf, spend the time to look at every opportunity that comes our way within the real estate industry, whether it is infrastructure, whether it is residential, industrial, commercial, or hospitality. We take the time to look at every opportunity on your behalf to find ways that we can create and improve your value. Whether or not we have specifically looked at that opportunity, obviously I won't give any forward-looking statements here in the public domain. But what you can rest assured is that if it's an opportunity, and as Jason said, whether it is in Jamaica or around the region, we will do our due diligence. And if we deem that it is the risk and the reward and so on is worth it, then we will use that opportunity to gain some shareholder value for you.
So you're going to other islands. I know the next one's going to be Puerto Rico.
Sorry?
You're going into other islands. So I know the next one's going to be Puerto Rico.
I am not certain where that assumption came from.
Well, yeah, SYGNUS SCI has investments in Puerto Rico. And Puerto Rico is a safe country as far as I see, safer than Dom Rep or any other country in the region. Am I correct?
Well,
it's a safe country.
Well, on the aspect of is Puerto Rico a safe country?
It is
fine,
a safe country.
But on the aspect of our next investment being in Puerto Rico, I believe what Jason said very clearly is that we are currently evaluating potential opportunities in 5 different countries around the region, but we have not yet made a decision as to which, if any of those, we will undertake. And I don't think it would be fair for us to declare here publicly, which country will be our next destination for an investment by SRF. But yes, obviously, if we have an office in San Juan, as we do in St. Lucia, and if the opportunity there meets the hurdle rate outlined in our real estate investment policy, then we will certainly make that investment on your behalf, sir.
Okay, sounds good. But I'll take a bet that it will be Puerto Rico.
Sorry?
I'll take a bet it will be Puerto Rico.
The first question is from Conrad Lawrence. What's the final position on the development in Iron Shore, Montego Bay?
Iron Shore, that is surreal. And you would have seen on Jason's presentation that in terms of exits on workouts that are in progress, that is going well. We expect to be able to make a final announcement on it very shortly. But in terms of what we need to do from a procedural standpoint, it is going very well, and we expect that shareholders will be able to get some news on it in the very near future. Obviously, I'm being very cryptic in my words because, given the fact that we don't want to make certain statements in the public domain before they have been crystallized. As of course, I see our auditors are also nodding that is, on the Jamaica Stock Exchange, JCSD is here. So, one more question online, yes.
This is from Daniel McPherson. Is One Belmont the only monthly income generating property SYGNUS has? If so, is SRF interested in developing more?
Want to take it?
So we have 2 currently. You have Spanish Penwood, and you have Belmont. And I would have highlighted that we have other investment properties that we are working through in terms of execution that will generate investment income, as well as the fact that we have third-party real estate investment notes that we currently invest in and generating income from them already. But I highlighted the 2.5 billion in commitments that we have, and all of those are pretty much income generating assets, and an additional 3 billion that include income generating assets from third parties, plus a nice capital appreciation opportunity.
Okay, thank you, Cyrilin. Okay, there being no other questions, I will formally propose resolution number 1 for adoption. And the resolution reads that the audited financial statements for the year ended August 31, 2024, and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Okay. For the shareholders attending virtually, I would now ask you to submit your vote on this resolution on the e-platform. For the shareholders attending physically, you will now vote by a show of hands. Again, I'm going to ask Mr. Andrew Foreman to oversee this segment. He will collect the votes and count and tell us what the results are. Andrew?
Thank you, Chair.
I'm so sorry. We will allow 2 minutes for the votes to be submitted. Thank you.
Shareholders present, all those in favor of the resolution by show of hands, please. And those against? Thank you. We'll take the votes online. Total of 49 votes were cast. All in favor, none against.
So the results are that a total of 49 votes were cast and all were cast in favor of the resolution. I therefore declare that the resolution carried. We move to the second item of business, that the interim dividends per stock unit of $0.2012 per share, approved by the directors on November 6, 2024 and paid on December 30, 2024, be treated on the recommendation of the directors as a final dividend for the financial year ended August 31, 2024. Once again, I'll ask Mr. Foreman to oversee the collection of the votes. For those persons in room, please raise your hand. For those persons online, please submit your votes on the e-platform. Once again, we will allow 2 minutes for you to submit your vote.
Thank you, Chair. All those in favor? And those against? We'll now take the votes online. Total of 48 votes have been cast, all in favor, none against.
Once again, I declare that Resolution 2 has carried. Resolution 3 was already adopted, so I'll move to Resolution 4. And Resolution 4 reads that the amount shown in the audited accounts of the company for the financial year ended August 31, 2024, as remuneration of the directors for their services be and is hereby approved. Again, for persons attending in person, you will vote by a show of hands, and for persons attending virtually, you will vote by submitting your vote on the e-platform. Mr. Foreman, over to you. We'll allow 2 minutes for the votes to be submitted.
By show of hands, all in favor of the resolution? And those against? Thank you. We'll take the vote online. A total of 46 votes have been cast, all in favor, none against.
Okay. Based on the tally, shareholders have voted in favor of the resolution. I therefore declare that the resolution carried. We'll go to item number 5, which is the appointment of auditors. That KPMG Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed as auditors of the company to hold office until the next annual general meeting at a remuneration to be agreed by the directors of the company. Again, I'll ask persons in the room attending in person to vote by a show of hands, and for those attending virtually to vote on the e-platform. Once again, we'll open the voting for 2 minutes, and I'll hand over to Mr. Freeman.
By show of hands, all in favor of the resolution?
Yes, Mr. Foreman.
Those against? We'll now take the vote online. A total of 47 votes have been cast, all in favor, none against.
Okay, based on the tallying of the votes, the shareholders have voted in favor of the resolution. I therefore declare that the resolution carried. At this point, having exhausted the resolutions, the segment pertaining to the resolutions, I'll now ask the CEO of SYGNUS Capital Limited, Mr. Beresford Gray, to come and offer some comments to the meeting. Thank you.
All protocol observe, and good morning, or afternoon rather, shareholders, and welcome again to the annual general meeting for SRF. Let me first start by commending the shareholders for asking some very interrogating questions. I really think that by keeping us on our feet and being engaging, not only help us to backtest our conviction, but also help us to give you clarity on our strategy what we are doing, and as Jason said, how we are creating value for you despite discrepancy, for example, in the share price. I'm not going to go through everything that was discussed in terms of 2024, but I must say that 2024 was a remarkable year for SRF. There were quite a number of milestones that were hit. The first and foremost was the end of the first development cycle. And the significance of that is that it allowed the business to prove its thesis, prove its strategy, i.e., can SRF function as a what you call a ground-up investment, real estate investment company? Can it acquire land, monetize it using creative solutions? Can it focus on areas where we as a manager have strong convictions? And can we consistently create value for our shareholders by making the right decisions? And most of all, can we manage risk within a dynamic environment? Every one of you as shareholders would have understand that SRF during the first 5 years of its life went through a black swan event, went through COVID. And after COVID, you have a lot of volatility in the market, commodity prices, logistic clogging, etc. And yet, the firm deliver almost 20% ROE. The firm also deliver One Belmont, probably the most impressive commercial real estate asset in Jamaica and the wider Caribbean to be completed in the last decade. And last year, the firm rewarded shareholders by paying out its first dividend. So when you put all of that together, what SRF represents is a firm, a real estate investment company that has proven itself to have a very robust investment thesis, one which can deliver shareholders value in any type of environment. So you should give yourself a round of applause for that. My job at SYGNUS is really to lead the team, and I have a extremely, well, let me say first, I'm very fortunate to lead, some of the smartest people in the world, some of the smartest people I've ever worked with. And in particular, the real estate team, lead a team that has unmatched expertise in real estate in the market. So I'm very privileged to do that. So my job is really to lead that team to deliver value for the shareholders. And that's what I'm going to talk about today. And I think everyone at SYGNUS knows that I am obsessed with the quest and the desire to deliver value for shareholders. That's why we exist as an investment management company. And that's why we created SRF, to deliver value for investors who trust us and trust the strategy, believe in our conviction to deliver long-term value for them. So I will talk a little bit about how will we consistently do that. And I'll touch on some of the things that Jason spoke about. And the first thing, in the way we will continue to deliver this value, is to leverage the expertise that we have developed in real estate. David and his team have, over the last 4 or 5 years, developed significant expertise in real estate. Why is that important? Our business is alternative investment, non-traditional investment. It's about searching for what we call alpha in the investment world. How do you find returns above normal? That takes expertise. How do you deliver assets such as One Belmont? How do you deliver projects such as Spanish Penud in dynamic environment that are filled with uncertainty? It requires expertise. How do you choose the right asset? Every day we get, I would say, hundreds of thousands of opportunities. Maybe I'm exaggerating, but okay. Every day we get hundreds of opportunities in real estate. People selling us land, persons want us to do JV with them. Persons want us to use that instrument to invest in their project. Lot of opportunities. You have to have the expertise to understand the risk, the nuances, which asset class is right, which market segment is saturated, how to negotiate contracts, and most importantly, how to pull together everybody and get them single-minded around a project so that at the end of the day, your execution is seamless. So we will continue to invest in our expertise so that we can execute timely, seamlessly, and creatively, and most importantly, within budget, because if we can't execute consistently within budget, we are going to destroy return. We are going to be thorough and diligent so that we choose the right asset, the right opportunities. One of my mentor, a very old guy, I'm getting old, but he's much older than I am. He always said to me, in real estate, you have to get it right up front. You have to spend a lot of time, which is what David and his team does. Spend a lot of time to get it right. Because if you get it wrong going in, you're not going to get it right coming out. So that's the first point I want to emphasize. And this is what distinguishes SYGNUS Real Estate Finance from any other real estate firm operating in Jamaica today. The other point I want to highlight is diversification. At the end of the day, acquisition of land is like an inventory to us as well as an investment asset. The development of a piece of land, the exit of it, renting of it, all of those processes are towards one goal: investment in real estate to generate value for an investor. So as an investment company, we have to pursue a strategy which not only embodies our conviction in particular areas. For example, right now, we have a strong conviction about industrial properties, and that's why Jason talked about the new project that we are doing, the 55 acres, which we are monetizing. We also have a strong conviction about resort properties, villas and condos and those type of things, and various form, because there's a huge demand, unquenched demand for resort assets across the Caribbean. And I think all of us in this room know that Jamaica trades at a relative discount to places like Bahamas, Cayman, Barbados. However, we have enviable airlift and infrastructure to support the demand and investment in resort asset. Now, diversification, both within asset classes, meaning some industrial property, some commercial, and of course resort and residential, which we at the moment have less of a conviction about because we think that there are oversaturation in terms of inventory in certain areas of let's say the middle to upper strata of the residential asset. However, by diversifying our investment across those classes, as well as geographical diversification, which we are embarking on to search for opportunities outside of Jamaica, will help to mitigate the return and the risk associated with investment so that any huge swing either way does not destroy the value that we are trying to create for our investors. The other things that we have to do in terms of diversification is to create income streams that complement the development life cycle, which is the development is linked to our equity investment, right? So when we are developing a property, we normally take an equity position in it. Now, we also invest in REINs, which are debt instruments. So we have to increase our investment in that area so that we balance the portfolio. So what we are thinking about and what SRF will evolve in is a well-balanced investment, real estate investment portfolio that is giving you equity return from our development assets, debt type return from the REINs, and as Jason put it, other income that is realized through our exit strategy. All of those efforts are geared towards consistently delivering value for our investor versus taking a, let's say, a very strategic and surgical approach to investing. Our job is to take a very surgical approach to investing. The other point I want to touch on is exit. And for me personally, one of the most important realization for SRF over the last 4 years is the ability to exit. As an investment company, again, you want to go in, unlock value, crystallize that value by exiting. So that was a big concern for us when we founded the firm. How do we consistently de-risk our asset and exit? And we have strategic partnership, of course, with some anchor investors, like some of the pension funds that can exit some of the asset classes that we invest in. However, it takes a robust economy to consistently exit real estate asset, or it takes creativity. Over the last 4 years, we have managed to exit quite a few assets, some of them using very creative solutions like the Spanish Penwood property. And we are working on a very creative solution to exit One Belmont that will reward shareholders in a broad way for their investment. So one of our job is to deepen the exit options and tools such that at the end of the day, whenever we invest in a property, all it monetize, we can exit to crystallize again for investors. So the other point I want to touch on, of course, And as an investment company, we would be irresponsible not to touch on that. Well, I'll touch on this point. The share price. I'm not going to elaborate on it because Jason did an excellent job articulating the discrepancy between the fundamental value of the firm and the share price. Our job is to ensure that there is always fundamental value. That's what our job is. You know, we would be worried if there was the chart that Jason showed you was the opposite, meaning the share price is through the roof and then the firm has no fundamental value. What it basically would mean is that at some point the firm is going to crash and the share price is going to crash as well. The chart is just show you is showing that at some point, if the market is rational, the share price have to trend towards the fundamental value of the business. And hence we are not overly concerned about what's going on in the market at the moment. We are focused on driving fundamental value. So, a part of that is understanding risk, understanding the headwinds, and managing around them. Right now, we have a lot of headwinds in the market. There are risk of inflation, well, high interest rate. There is also, for us who live in Kingston, excessive increase in property prices. So, you know, that's why our JV strategy works very well for us. There's also geopolitical risk that is going on. And some of those geopolitical risks can actually help to support our conviction around the logistic and industrial sector, for example. But the message is that SYGNUS is aware of all of these headwinds. We have our fingers on the pulse of these headwinds. We are watching the market closely, and we are designing strategies to mitigate and manage SRF within the current state of nature and the outlook of the state of nature, such that though the road might have non-linearity right now, the road to execution or creating value might have non-linearity because of those macro factors. We see all the opportunities and are very aware of how to mitigate the downside. So for that reason, I stand here today with a very strong conviction about the future of SRF and the type of value that SRF is going to deliver, not only through the Starboy projects, but through other projects that we don't even talk about as yet. So ladies and gentlemen, I want to thank you very much for listening, and thank you very much for attending this AGM. Thank you.
Thank you once again, Barris, for those comments. We're going to open the floor once again for question and answers. So we're going to have 15 minutes where we'll all be able to submit our questions and have them answered. I hope we have some additional questions, and we'll take questions, about anything associated with the company, not just financial statements or the reports, but, ask about the future. Ask whatever questions that may come to your mind. Once again, I'll ask Director Cummings to oversee, moderate this section. But please, you are invited. Please raise your questions so we can converse with you. Thank you.
Thank you,
Mr. Chairman, pleasant good morning. Lancel Bloomfield here, shareholder. 3 quick questions. Page 4, your 5-year statistical review. In 2021, your profit was 1.81 billion. And
sorry, can you hold a second? Just want to make sure that we are on the same page. Is it page 4?
Page 4, your 5-year statistical review.
Yes, go ahead.
In 2021, your profit was 1.81 billion. And your second highest earnings was in 2022 with 692.96 million. Since then, your profit has fallen off substantially. What are the plans to improve on the profit margins?
Jason, you want to take this?
Thank you for that question. Very good question. So the way I'm going to answer the question is very simple, right? So in the real estate asset class, because you're investing in illiquid asset, one, and you need time to actually unlock the value. The way you generate return from a financial reporting perspective is 100% of the time going to be very lumpy. So if SRF was just buying finished real estate assets for the lease income, then we would have a very smooth curve where every year you could see the revenue rising, because as lease rates rise, or as you get more tenants, then you would see the profitability increasing. SRF is not in that business. We buy land, let's say today, and then the value of that land increases by a small amount. But then if we start construction on something, the value of that construction doesn't start to reflect fully until the project has been substantially developed. And once you get to that stage, then that's when you see revenue shoot up. Or, another example, if we are skilled at negotiating and we buy a piece of property and get a steep discount, then when we get to the financial year end, when we are doing the valuation of the property, then that gets reflected. So, to answer your question specifically, our strategy to increase revenue is to deploy capital across our second investment life cycle. We already went through the first investment life cycle where we generated 19+% return on average equity, and our second investment life cycle is to try and repeat that feat by, one, developing the 55 acres that we have in Lake Spen, which I would have substantially gone through in my presentation. Of course, you're not going to see that value being reflected, because right now what we are doing is doing the design works and figuring out how to execute that project, right? Same thing for Mammy Bay, which is 14 acres in St. Anne. These are large assets on the balance sheet, which will have the potential to drive large levels of return. But this is not going to come like the click of a finger, right? It takes time to unlock that value. But once we are far advanced in unlocking of the value, then you're going to see the revenue increase. So, and net profit. So to answer your question again, be very forthright, you're going to have lumpiness in terms of the returns, right? Because if next year, for example, that's when the value creation for Lake Spen is actually executed, then you're going to see a big jump. And then you're going to level off again until the next asset on the balance sheet gets developed. In the interim, the smaller assets, such as the third-party projects and the real estate investment notes, etc., will continue to give you some amount of revenue. So to answer your question, is just continuing doing what we have done. The key for us is, at the end of our investment horizon, what's the return that we have generated? Whether most of the return come at the front end or it come at the back end doesn't really matter. The quest for us is, what's the final return to shareholders? So I hope I've answered the question. If not, you can ask it a different way. I can provide additional clarity.
Okay, accepted. Mr. Chairman, in your annual report, there is a mark absent of the names of the senior managers who runs this company, seeing that all the directors seems to be non-executive. Why is this so?
I don't believe that's the case. Can you hear me? Oh. No, if you check the directors, recall when the chairman was given the introduction of the board, you do have a mixture. I'm an executive director, also is Dr. Ike Johnson, who we declared has joined the meeting online. And then you have the non-executive, of course, as well. So we do have a mixture on the board of SRF of executive and non-executive directors.
But who are the senior managers? The annual report only states the directors. I haven't seen the senior managers who runs the company.
So recall that SYGNUS Real Estate Finance is a fund. So there is an investment manager, which is SYGNUS Capital, that actually runs SYGNUS Real Estate Finance. So if you're asking about the employees are employed to SYGNUS Capital, which is the investment manager.
I might see with that, but I'll leave that alone.
No, well, I really would like for you to understand, because you're trying to understand the key personnel who are running the company.
Yes, sir.
So I was just trying to outline the structure and how the company functions. Sorry?
Mr. Blum, may I take that?
Sorry.
So, good question, right? So the short answer to your question, I am one, David is one, Burris is one, Serlin is one, Justine, all of us are the senior executives of SYGNUS Capital, who is the investment manager.
So one would love to see, if you turn the pages of that annual report, one would love to see that segment that separate the directors, even if some of the directors who would now become executive directors. It has to show who are in charge on a day-to-day basis of the company. So I'm saying I have not seen it in the report.
Good.
And I would love to see it just like every other reports on any other company.
Okay, so good observation, and the answer to why you're not seeing it, as David highlighted before, is because unlike every other company that you're probably used to, this company doesn't have any employees. So SYGNUS Real Estate Finance, there are no employees in SYGNUS Real Estate Finance. SYGNUS Capital Limited, which is a company, is the manager, and SYGNUS Capital Limited is paid a management fee to manage the company. So the employees are in SYGNUS Capital Limited, and because of that, to the strict, following the rules strictly, we can't put persons who aren't employed to SYGNUS Real Estate Finance as employees or as senior managers per se. But I'm saying in the report, where you see it says the investment manager SYGNUS Capital Limited, then SYGNUS Capital Limited is the one who has those employees, and I was demonstrating to you some of the people who work for SYGNUS Capital Limited, which include myself, David, Burris, and many other people in the room. And the two persons who sit on the board who are actually employed by SYGNUS Capital Limited would be David and Ike, who isn't here, he's in St. Lucia.
Accepted.
Okay.
Last question. Page 90, note 21. Your audit fees has climbed to 26.257 million. In 2024, from that of
Sorry, you said on page 19?
page 90,
Or 90?
right, note 21.
Go ahead, sir.
Your audit fees has climbed to 26.257 million in 2024 from that of 21.8 million in 2023. What has caused this increase?
Good question. So, as you know, we have been going through a period where the cost of both goods and services has been increasing, and auditing fees, there's no exception to that. Those services, the costs have gone up given the state of play in Jamaica, across the Caribbean. If you look at the audited financial statements of pretty much every company on the Jamaica Stock Exchange, you would recognize that all the audit fees are higher. So it's just the market that we are in, where the cost for certain goods and services based on demand and supply has gone up. And in the case of audit fees, there's competition from overseas, where some of the personnel that are in Jamaica are migrating because of higher wages overseas. So that's just a standard process that is affecting every single listed company on the stock exchange.
So before you leave, sir, so while we accept that explanation, will the shareholders be getting an increase in the dividend too?
Yeah, so let me couch my answer this way. You can also, apart from us striving to pay higher dividends, you can increase your dividends by buying additional shares.
No. That's not increasing the dividend.
Yes.
In real terms.
Yes.
We're talking, no. It's the same dividend amount you're paying out. So mathematically, it doesn't pan out.
I'm just saying there are two ways to increase the dividend. One of them is we paying more, and the other one you buy more shares. So yes, we will endeavor to do both, and you endeavor to do likewise.
No, we would like to see an increase, because if you look at the net book value, there are only two ways a shareholder can increase their returns.
Yes.
It's either by market appreciation.
Yeah. Or we pay you more money.
Or you pay more money.
Agreed.
Right? So instead of sitting down waiting, and you see what happened, this is one of the better companies on the market that deals with real estate, because you have low liabilities, you have low amount of shares that have been put out on the market, which is unlike other companies who put out billions of shares, not being able to pay billions of dollars or millions of dollars in dividend. So, and you have managed your liabilities. So that gives you your net book value of 24. But if I purchase 1 million shares at the net book value of 24 million, right, $24 per share, only to realize I spent 24 million plus 25, 26 when the fees are added, only to get 20 cents on that, then that's not really investment.
So perhaps I need to pay you some fees for your free analysis.
Thank you on that.
Yes, we have another question, gentleman in the hat.
Yes, thank you. Bertram again, shareholder. I like your 3 eyes guiding principle. And I'm curious, how do you maintain your independence day to day? What does that look like? What are you being independent from? And in an election year, I think the shareholders would like to have the confidence that whatever the outcomes of the general election, for example, that the trajectory still looks up, right? How do you maintain this independence? What does it look like day to day, project to project?
That's an excellent question. So independence means free of external influence or outside environments. And you should be proud that your company, SYGNUS Real Estate Finance, is publicly listed, and we are very transparent with our governance. So there is the list of shareholders is transparent. The top 10 shareholders are published in the annual report. I believe the top shareholder only has 12.9% of the total issued shares of SYGNUS Real Estate Finance. And we have a we have an independent real estate advisory committee. We have a real estate investment policy, which necessarily all investments must be in adherence with that policy. So it is highly unlikely that any single party or external influence can infiltrate those governance systems that we have in place as a publicly listed company to influence our decisions, and decisions are always in the best interest of you, the shareholder. So independence means we are free from any political, free from any regulatory, well, not regulatory as in influence outside of the normal regulatory guardrails. But we are free to act in the best interest of our shareholders in our investment decision-making processes. Are you?
Yes, that's helpful.
Sure. Let me add, Jason will add some more.
So it's a good question, right? So very simply, independence for SYGNUS, as David said, it really means independence of thought, you know. So if you think about how SYGNUS came into being and why you are here as a shareholder, if we didn't think independent of everybody else in the market who say, okay, this is the way you must do investment, we are not beholden to any flavor of the month or flavor of the day, strategy or philosophy. Independence means we trying to find a solution to a problem. We start with a blank sheet of paper, and because we are independent minded, we have to be creative and innovative to find a solution. And that's how SYGNUS Real Estate Finance came into being. And that's why we're the only ones executing real estate in the way that we are doing it, right? Which is why our financials are always kind of lumpy. All right, so that's a downside to some of your independence. But the 19.15% return on average equity, that tells you that because of how we think and how we behave, and it doesn't matter if markets are good or markets are bad. From our point of view, all we are looking for are solutions to solve the problem. In your case, to make sure we can make money for investors. In the case of our partners who own property and we are collaborating with them, it's really find a solution to ensure that their development can be executed and for them to make money and we make some money. So ultimately, the way how we do this on a daily basis is everybody's opinion counts. And you know, if there's no brightest person in the room philosophy. Anybody could come and have an idea and say, yo, I think that we should do this. And once we evaluate it and it makes sense, then it gets executed. And that's a very different philosophy from you might have in some other places, like Mary Jane say X and everybody have to toe the line and follow the X, you know. So by having that philosophy as a firm, then that allows us to create solutions and sometimes overcome what people would call as insurmountable problems.
All right. So,
sorry, before you go on, if I can just add one more point that Jason just brought back to mind about independence, in that when we were doing One Belmont, the market was saying to us that we were crazy to design a 9-story commercial building in the middle of COVID when the future was going to be work from home. So why is SYGNUS wasting time to develop a 9-story Class A building in the middle of COVID? but we were independent. We did our homework, we did our due diligence, we knew what we were doing, we knew the tenants we were targeting, and we executed. So that's a classic example of how we have demonstrated to the market we are independent because we did our research, we knew what we were doing, and everyone thought we had lost our minds to break ground in the middle of COVID on an office building when the world had concluded the future is work from home.
Excellent. So, would the team say they have the confidence of whatever party forms the next government? So there will be no, I don't know exactly how political influence would seep into a business like yours, but does the team say, listen, based on our performance and who we are, that whoever forms the next administration, you have their confidence as a business?
The answer to your question is short. That's a very political question. As I said in my presentation, we are very comfortable as an investment group with any state of nature, right? So we are very comfortable that we are operating in a democratic country and a highly democratic region, and the markets that we play in are markets with low political risk. We see Jamaica, whichever party is in power, as low political risk, and that's why we are comfortable pursuing our strategy here. So that's my answer.
All right, third party, what does that mean? Because One Belmont Road went up real fast. I mean, there was, I think, an insurance company there, a roofing company, and I think a bar was there too. And that place, I mean, you guys, when you say third party, it means construction involved where you are, I know you said design, but somebody project manages the construction? Because that went up real fast. I mean, 9 stories. So the third party, when he mentions third party, give me what does that mean?
Third party, he said? Third party? Read. Okay, no. So, a third party in the context of arena, which is different from Belmont, because Belmont was not arena, which I'll come to in a second. But third party means another entity. So if we're doing a arena, somebody comes to us and they have a property, they want to develop it, and they've asked us to lend them money, so a debt financing, essentially, which is what REIN is, real estate investment note. So that's the third party being referred to. So you have SYGNUS Real Estate Finance doing a real estate investment note with a third party to do an investment. Belmont itself was not a REIN, that was an equity investment by SYGNUS Real Estate Finance through one of its subsidiaries. Now, you mentioned it went up really fast, so I noticed there were 2 questions sort of melded into one.
No, what I'm saying is because, you're just in the finance part of it, right? But then you have to push the developers to get that building done fast.
Well, correct, yeah. Well, we do development management. So the investment itself involves several components. So whilst we will outsource the professional work, so we will outsource because we don't have architects and engineers and so on SYGNUS Capital staff. So we will outsource those professional items to get an architect to do the design, to do, to get approvals done. All of that we outsource clearly. But then when it comes to the contractor, we will do a tender. For Belmont, we had 7 contractors actually applied to do that particular project. So yes, we will outsource that, but I wouldn't say that it went up faster than any other project of that sort of particular standard. We had the project was delivered certainly within the framework of what we anticipated, but I guess driving past it over a few months, it may have appeared to go faster than normal, but it was a traditional block and steel construction. It has been designed to the very best of seismic standards globally. We have put the required amount of high strength concrete and steel in that building. The windows themselves are Cat 5 hurricane. So in terms of, just to make sure I'm covering any nuances in your question, it may have appeared to have gone up fast, but I can guarantee you that we took the time in the design and the building, and I was on site every morning, every Friday for about 2.5 years, every single Friday morning. So we, the real estate team, which obviously Jason was speaking to, we, the real estate team, we are at the project sites on a very regular basis to oversee the professionals that SRF contracts to do the work on our behalf.
No, that's what I'm saying, the quality, I mean, of course you have to have good quality, but I'm saying you don't have to tie up all that money and take 10 years to build a 5-year building. That's supposed to take 4 years then. So you have to, like you said, you're on site, and that is stimulating them to work faster, quality is good and everything. So that is what I'm saying. I mean, is that you have to be there, because if you leave these workmen and you are not there, work stop. So you have to be there to ensure the work is done, which is what you did.
Sure, absolutely.
So therefore, that's what I'm saying, that building went up pretty quick, and it's a good looking building, and it went up on time, I'm sure within time probably. It didn't go over the time that you expected it to be done. I'm sure it was done within time. Yeah, giving a compliment. Yeah, that's what I'm saying. Basically, that's what I'm saying. So hold on. So therefore, all the projects you have out there, you have to make sure that they get done on time with the amount of money you're putting out. They have to be all done within, and you have to be there to watch the site, make sure everything goes as planned.
Yeah, absolutely. Yes, it's a big part of my job description.
Right.
I mean, the fund manager holds me obviously responsible to ensure it's part of how my performance is actually measured.
Right.
And it's our obligation to you as a shareholder.
Right. So all the projects you have to keep on the ball with all of them like that.
And that's what we strive for, sir.
Yeah. Okay.
As David is standing here, I'll just ask him to move the vote of thanks, and then I'll make a few comments afterwards.
As we come to the close of today's annual general meeting, it is my honor and privilege to express our sincere gratitude to all those who have made today's event such a success. I think we can conclude that it has been a productive meeting, and so kindly allow me to move the vote of thanks on behalf of SYGNUS Real Estate Finance. First and foremost, I would like to extend a heartfelt thank you to all of our shareholders, that's you, partners and stakeholders, for your invaluable contributions and continued trust in SYGNUS Real Estate Finance. Thank you, our valued shareholders, for considering and passing the 5 resolutions. Your unwavering support and belief in our vision have been fundamental to the success we've enjoyed over the past year. And we are deeply grateful for the confidence that you have placed in us. Our second acknowledgement and thanks is to everyone who took the time out of their busy schedules to be with us this morning. whether in person or virtually, we sincerely thank you. Thank you as well to the myriad of professionals in the real estate and construction industries who support our project execution, including architects, real estate agents, engineers, quantity surveyors, land surveyors, attorneys, contractors, suppliers, and project managers, to name a few. These partnerships were the cornerstone of the teams that enabled the delivery of the projects that you heard about today, and undoubtedly those yet to come. A special thank you to our board of directors, led by Mr. Horace Mesado, for their exceptional leadership and strategic guidance. Their vision, counsel, and direction have been key to our achievements and paved the way for continued growth and expansion. As you have seen demonstrated here today, SYGNUS Real Estate Finance remains strong on innovation, conceptualization, development management, establishing partnerships, and ultimately, project execution. There is a team behind this. To the President and CEO of the SYGNUS Group, Beres Gray, thank you for your continued robust leadership in guiding the company to achieve these results. We also want to acknowledge our hardworking and dedicated team members whose passion, expertise, and commitment to excellence are the backbone of this company. Every department, every individual plays a crucial role in driving our success, and today's meeting is a reflection of their relentless efforts and dedication. It is important for us to recognize some of the team that stands behind your company. Let me single out Jason, Justine, Kyle, Andre, and Nicolette on the investment management team, Stephen and Avon on the private equity team, Monique, Jackie, Sharon, Sosha K, Shanae, and Danae, and the entire finance team, who literally have no nights or weekends off as they move from audit to audit. Yashi and the risk management team, Greg, Stephen, Anna, and the investment banking team, Liz, Renee, Tanaj on the marketing team, Serlin, Andrew, Marcia, Shamon, and Daniel on the legal and compliance team, who supported by an entire cast of other business units within SYGNUS, who all helped to deliver this performance. Last, but by no means least, let me also highlight my own real estate team, led by Dwayne, but also recognizing the work of our former colleagues Andrew and Peter Gay, who were the backbone on the ground at the project sites, creating the value. Thank you all. The takeaway from me highlighting this important cast is the fact that behind SRF, as per one of the questions, there is a robust team of hard-working professionals whose relentless aim is, simply put, working for you. I must also highlight the work of our team of real estate consultants who form a committee known as our Real Estate Investment Advisory Committee, and in particular, the external member of that committee, Mr. Jeremy Brown. As you are aware, it takes a collaborative effort to successfully stage events of this nature, and so we now recognize those directly and indirectly involved in bringing this to reality. We extend our thanks to our General Counsel and Head of Legal, Vice President and Head of Legal and Compliance, Serlin Hudson, and our team, who spent many long hours in planning and organizing this third SRF AGM. Thank you also to the SYGNUS marketing team, who invested so much thoughtfulness and energy into assembling and leading this very professional production. Let me single out some of some members of their team of professionals and practitioners. The production team includes Phase 3 for the audio and video, the Appfinity team for establishing the online streaming platform and facilitating voting, Agile, our trusted IT partner, Reasons and Seasons for the decor, Simply Dandy for the social media production, Jose, our ever-present videographer for the media footage. He will be sharing on multiple platforms, and of course, LH Multimedia for their photography. The professional team also includes Garrick Communications for the PR, and once again, Simply Dandy for the production of the annual report, written, of course, by our investment management team, who I highlighted earlier. As always, the annual report is intuitive and makes for easy reading. We also give credit in advance to the media for their continued and anticipated coverage of the report. We also like to express appreciation to the management and staff of the AC Marriott Hotel for their impeccable hosting and overall support. Let me thank our auditors, KPMG, for the audited financials, and of course, Digicel for enabling Wi-Fi support for this AGM. To all of the other unsung heroes behind the scenes who I may not have mentioned, we acknowledge and thank you. We are also deeply appreciative of the insights shared today, from the detailed financial presentations to the strategic outlook. We've had the privilege of hearing from some of the brightest minds in the industry. Lastly, I would like to thank each one of you present here today, whether in person or virtually, for your active participation and engagement. Your questions, comments, and feedback demonstrate the strength of the partnership we have built together, and they serve as a reminder of the shared purpose we all have in driving the continued success of this company. Once again, thank you all for attending this third annual general meeting of SYGNUS Real Estate Finance, and we look forward to seeing you all next year. As we move forward into another year, we are filled with optimism and excitement for the future. The road ahead is full of promise, and with the continued support of you, our shareholders, there's no doubt we will continue to achieve even greater milestones together. Thank you for your time. Thank you for your trust. Thank you for your unwavering support. We look forward to the continued growth and success of SRF and working together as we navigate the opportunities and challenges that lie ahead. I wish you all the very best, and let me take this opportunity to wish you all a productive remainder of the day.
I guess the only person that is left for me to thank is David himself personally. But very well done, David. Thanks very much. We appreciate our shareholders, and thank you very much for being here. Just a few items I'd like to mention. We have concluded the formal business of the day, but I just want to, make mention of a few reminders. So we want to remain in contact with you. The company wants to be able to communicate with you, efficiently, and so we're just encouraging persons who have not yet submitted an email address to do so, so that we can have your records. If you submit it to the JCSD or registrar, that would be important. That would be good for us, and that's very important for us to be able to remain in touch with you. Additionally, we want to create a very seamless channel by which we can pay your dividends. We don't want to draw a check and for some reason the check don't get to you and it don't get to your bank account. We want to be able to just put the monies directly into your bank account. So if you don't already have a mandate set up on your account, please do so. Add your bank account information so that when we're paying dividends, you don't have to ask any question. You just look in your bank account and you see more money, and that's good, especially in the context of us having a 50% discount on the shares. So we can go and buy some more shares get more dividends, and I'll challenge the management to look at increasing the dividend also, okay? At this stage, I just want to say thank you very much. It has been a good day. Thank you for being here. Wish you a wonderful rest of the day. And I look forward to seeing you and other shareholders here next year as we have the AGM for the year ended August 31, 2025. Very best wishes. Thank you for being here. See you soon.